Hello and welcome to Gold and Silver Assets. It's Sunday the 12th of April 2020. Last week we spoke about how the paper and physical markets appear to be diverging, and the physical markets certainly do remain tight. I don't think there are many retail buyers who can actually get hold of silver coins right now, and any gold and silver coins that are available come with a high premium over spot. And recently I've been hearing accusations of how bullion dealers are price gouging. I actually think this is really unfair because the demand for bullion has been off the charts and supply has been diminishing with mine closures and closures of refineries. And I think this is just simply market forces coming into play finally in the precious metals markets. There are certainly some odd things going on with the precious metals. So this is a chart showing the COMEX futures price minus the spot price, and so effectively it shows the futures premium over spot, and this chart goes back from September 2019 to currently, and we can see that for most of the time the premium has kind of remained below the $10 to $15 range, usually around the 5 to 10 range here. And that's been like that for many months, but more recently the premium shot up to 60. It did settle down for a few days, but then went straight back up, and the last two trading days saw the premium hit 70 and it closed just below 60 on the last trading day. So this kind of action is certainly abnormal, certainly in the short term, but that got me thinking, has this ever happened before? And this is the gold futures premium over spot on the monthly scale, going all the way back to 1976. And I found this chart quite an eye-opener. This chart basically confirms that what we're seeing now has never occurred before. And basically this is highly abnormal and is extreme behaviour. And this tells me that something is very wrong in the paper gold markets. I don't know what's going on here. There's lots of talk of things like lack of liquidity and low trading volumes, inability to deliver physical. Who knows what's going on here? All I can say is that this is something quite out of the ordinary. And to me, this signifies some form of instability in the paper markets. So then I thought, let's have a look at what's going on with silver. And so this chart shows the silver futures premium over spot on the monthly scale, and this goes back to 1998. Again, we have a large spike, and the last time we saw such a large spike was when silver prices peaked. So I've drawn the silver prices here in the orange line. And so to me that seems a bit unusual because we're nowhere near a peak here. We're actually at kind of close to 4-year lows in terms of the silver price. So this doesn't make sense, and again it suggests there's something not quite right here. As we mentioned earlier, the premiums for silver and gold over spot have shot up, and certainly over the last month we can see normally silver trades at around a 10% premium over spot, and recently it's shot up to over 80%. And with gold, usually the premium's around 3 to 4% level, but again it's shot up. So on this chart it's showing between 6 and 7%, although I have heard of much higher premiums being paid depending on the location. Now, premiums have been at similar levels in the past, but the thing is that when the premiums have been high in the past, it's usually when the prices of gold and silver have been at lows. So for example 2008, 2013 and 2016. Whereas right now, certainly gold is at a 7-year high, although silver is certainly at a low. So again, this doesn't make sense. Something's not quite right here. This chart shows the gold-silver ratio over a 100-year period. And this ratio recently went above 120. And not only is this a 100-year high, it's actually at a 4,000-year high. But you've also got to remember that this is based on the paper markets. And if we were to use the physical prices, then the ratio would be lower, probably somewhere in the 80s, I would suspect. And what I would love to see is actually a chart of the physical versus the paper gold-silver ratio. And I suspect what we'd see is a big divergence more recently. So, again, this is very abnormal. Something's wrong here. So let's go back to our good old gold spot price in US dollars on the weekly scale. And these are the channel lines that we drew previously. And we can see that price made it out of the top of the channel yet again. And the question is, will it be able to stay up here? This is certainly a good strong green candle, suggesting that the momentum is upwards. One thing to note is that we haven't made a recent higher high yet. However, on the futures chart we have. So if we do continue upwards, there is overhead resistance at 1800 US dollars. And that dates back due to the price action from 7 years ago. And so as a result, remember that the road to 1900 US dollars won't be plain sailing. And looking more closely at gold in US dollars on the daily scale. So again, we have a nice strong green candle to end the last trading day. And we may well continue upwards from here, in which case the next target would be 1800. The other possibility is that we retest this channel before resuming the upwards move. There's just one thing I'm a little bit wary of, is that this price action seems to have formed what looks like an ascending wedge. And so if we get a breakdown below 1660 US dollars, then there's a couple of things that are likely. This is probably going to be an early sign of either the retest of the top of this channel line, or if it does break through, then we'll be looking at a target back to the base of the wedge, which is 1560. Moving on to silver in US dollars on the daily scale, and silver price rebounded very nicely from the bottom of this channel line, and it even managed to break through that overhead resistance line, which is shown in red. And as with gold, if we do continue with this upwards momentum, we do have overhead resistance at 17 US dollars. There's a possibility of retesting the red line, which should hopefully turn as support and allow price to resume its upwards movements. Any break of 1470 US dollars would suggest further downwards move and possibly a retest of the bottom of the channel at 1150. I'm doubtful price will go below that. I suspect that would represent a bottom, and an upwards move would potentially mean we're looking at a large double bottom there. And moving on to GDX on the daily scale, and the miners have continued to steam upwards, and we now have two gaps that are formed. So one at just above 24, and we've also now got one that's around the 26-27 level, which is a much larger gap. The price action also seems to be forming this upsloping ascending wedge, similar to gold and silver. And so I would say that a break below 26 would suggest that we'd be closing both of those gaps and could lead to a further move back to around the 18 level and possibly even lower. Now, as I've said in my previous videos, I am bearish on the miners at the moment due to the effects of things like the shutdown of mines. And I also think that the miners will get dragged down when we have another sell-off in the general stock market. So why do I think that we have another sell-off in the stock market coming? Well, the current rally that we've had has been pretty impressive, but to me it just seems like a little bit of a fairyland rally. it doesn't really fit with the fact that the economies basically have shut down in multiple countries around the world, with multiple millions of people unemployed. It just makes no sense, and it's partly based on these promises of stimulus. So I think this rally is going to fizzle, and we're going to see another drop. So I don't think the bottom in the general stock market is in yet. One of the reasons that I think that's the case is that people are still very bullish. I'm still hearing talk about buying the dip. And usually when the bottom of the stock market has been hit, people are very pessimistic. A lot of people lose interest in investing, and you get headlines like this in prominent magazines and newspapers. So this is the cover of Business Week in 1979, which talked about the death of equities. And of course, at that point, that was the start of a massive bull market that occurred in the 80s. So I don't think we're close to a bottom at the moment. I think there's more to come. And remember that that will affect gold, silver and the miners. However, I do think that any dragging down of the precious metals and the miners will be temporary, particularly when people start to realise that these are going to be the major safe haven assets. That's all from me for this week. Hope you're enjoying your Easter. Don't eat too many Easter eggs, and we'll see you next week. Bye.